Hello, hello, and welcome. Today is Thursday. It's October 7th, 2021. This is episode 5 of this brand new series on the Banter Show. Hit like, please hit subscribe. Trading Wisdom. This is episode 5. Trading can be really complicated, and what I'm going to try to do is simplify it for you. People know me as a newbie helper. I'm a chart guy. When I got started, someone helped me out, and I've spent a lot of time since then growing, learning, and teaching. Eventually published this book, Trading Wisdom, and really that's the genesis of this show. So, by the way, the mask is for privacy and nothing else. And with that, let's get it started. Awesome. So glad you joined us. The format of the show is we're going to spend the first part talking about the book. The lesson this week is the dangers of social media. So we're really going to be interesting to flesh that out. We'll do some basic chart analysis, and then we have our guest. And we do have some great guests. We've been really lucky so far. And that streak continues with Chart ManDan. The guy is awesome. So I really look forward to bringing him on later. Just want to start out and say thank you to our sponsor, Bing Bon. They're a great exchange if you're looking for somewhere to trade crypto, forex, commodities, indices. They just do a lot of great stuff. The link will be in the comments below. You can find me. I am on Twitter at Big Cheds. If you're interested in the book is on Amazon, Trading Wisdom. Please check out the reviews. If you can't get the book for some reason, I have a free version on YouTube. My channel, Cheds Trading, the playlist, do one chapter at a time. Also, if you're interested in learning more about how to trade my type of analysis, I'm a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. So please do go ahead and check that out. But for right now, we're going to talk about the book. I'll leave this up here. You can pause and read about the author, read that introduction section. I won't waste your time now, but you can go ahead and check that out. What we're going to do today, we're doing lesson 21. This will be a fun one, dangers of social media. So, page 51. Let's jump right into it. So I'll start kind of at the end of the chapter. Let's see. This is a quote I like to talk about a lot. Never execute a trade based on a single tweet or message you see from someone else. Be a rock, not a blade of grass blowing in the wind. Think about that. That blade of grass, they're so easily moved. They've got no conviction. They need other people to have that conviction for them. So if they see someone who's excited and they're long, they jump right in. You really need to, have your own plan. You need to not pay attention to that shiny object and really that shiny object trade. And it's so hard to do it because, especially after a series of losses, right? Especially after you've had a bad streak and you've been losing some money. You see your friend, they're like, boom, and you want to just jump on. But really, every trade should be planned out ahead of time. You should be scanning it, watching it, understand the price action. As I say in the book, you have to find a way to avoid the shiny object trade. Imagine you're having a tough trading week and all of a sudden you see a certain play being mentioned by everyone. It is tempting to stop what you were doing and immediately jump into this play as a way to fix your bad trading day. But in reality, you are being incredibly irresponsible. Avoid chasing that shiny object and instead stick with what you have been watching. That's such an underrated point. You want to play whatever it is you play. It doesn't matter what it is, as long as it's something you've been watching, right? You want to understand the price action, right? Not just the chart, but the ebb and flow of it, even who's playing it. You can see groups are in it and different, types of traders, different things are going on. So you want to try to be observant. Let's see. Another one is, like who to follow, who can I trust, right? That's really hard. Who can I follow? Who can I trust in social media? A lot of people only post their winners, right? Quote, the best traders will admit that they have no idea what is about to happen next. Treat anyone who claims otherwise with a degree of caution. So it's really easy to tell someone what they want to hear. It's really easy to tell someone it's always bullish, or it's really easy to tell someone, the X, Y, and Z is going to happen. Especially if there's no accountability. Someone can delete a tweet, or they can say, oh, you didn't understand me, stuff like that. So, really the best traders have no idea what's going to happen next. They don't anticipate as much as they observe, and they look for clues, signs of strengthening, weakening trend. So you should never be, from the book, you should never be so irresponsible that simply by seeing a tweet or chat room message, you are encouraged to open up a new trade and risk your funds. All your trades should be planned out well ahead of time. And if not, you should spend more time watching the price action before bidding. We talked about that concept. So actually, here is a quote from our guest, ManDan. The quote is, "You can feel the hundreds of thousands of people scouring message boards and social media right now to try and find comfort from the posts of others, to feel better about red positions. I get it. My comfort comes from candles and lines on charts." Chart guys on Twitter. We'll ask him about that quote later. I've been there. Oh man, have I been there? I'm holding a position overnight. I'm not comfortable about it. I'm not confident about it. I have too much money in it. And I hit that search feature on Twitter and I want to see other bullish people to make me feel better. I just need someone else to make me feel better. Like, just hold me. That's how you feel sometimes. And that's just, you're in a bad spot. Like, why? You got to stop. Like, how did I get into that spot to begin with? So, step one is to observe yourself, observe your behavior. If you keep getting in these tough spots, you got to start to learn, what's triggering that. Are you entering too heavy at first? Are you jumping in the middle of the channel? Other lessons obviously come into play, but most of it is risk management. Just defining, your risk. When your trade idea fails, you have to cut the trade. I mean, that could go in every lesson in this book. When your trade idea fails, get out. And then, from there, everything's a lot easier. So that'd be interesting to ask ManDan about that quote. So I say in the book, so many of us do it. As soon as we find ourselves in a tough trading situation, we run to social media to comfort ourselves with the words of like-minded individuals. We do this because we are not confident enough in our current trading plan, so we look to others for confirmation, right? You shouldn't need to do that. I get when you're starting out, that's fine. And if so, paper trade, which means just don't even use money, write the idea down on paper and pretend you're trading it, or, use a really small amount of money. You need to, when you have confidence, that's when you trade. Without confidence, no trade. Like, put that in your mind. And a lot of that boils down to, with a little bit of experience, you learn how to recognize what a real setup is, what a real opportunity is. And you start to realize, hey, I'm just bored. I'm just trading because I'm bored, or I'm trading because I'm revenge trading, or something other than, because you have a good opportunity. So back to, who do you trust? So you got to be careful, right? It is quite natural to get caught up listening to people on social media who tell you that whatever play you are in will keep going and will try to discourage you from taking profit. How many times have you heard, this is the last time X will be priced this low? It's like a cult thing. You get shamed. You're in these chat room groups, you're in these trading groups. You got to be careful. Like, they'll shame you into taking profit. But it's your bills you're responsible for. Manage your position, take profit, right? De-risk yourself. Don't let someone else shame you, into not taking profit. So there's so many dangers of social media. I mean, I could have wrote several chapters on this, but who can I follow, and chasing shiny objects. You got to be really careful. So I think we're getting close to time to, let's finish up this chapter. We'll jump in, we'll do a little bit of market analysis. And I finish up the chapter with the quote, "It is okay not to chase every play you see on Twitter. Stay focused on your own watch list and be the master of your plays," right? Think about that. Like, don't you want to feel like you're the master? Don't you want to feel like you're in control? And you do that when you're executing your plan, right? And not just executing someone else's plan. Please hit that like, please hit that subscribe button, for the Banter team and the Banter fam. Let's jump right in. I know we are, many of us are in Bitcoin. What is going on? What time frame do I look at, right? That you get that question a lot, and you want to try to go outside in. So it's good to weekly, to daily, to, to 4 hour, to 1 hour, etc. When you go to really low time frame is when the price is at a key pivot. And I'm not going to abandon the weekly here. I do want to talk about it, but I will give you an example on the daily chart. So as the price was just recently bouncing and testing that September high, you can go to a lower time frame. When you're at key levels in the chart, even down here, when the price, in the last couple of weeks when we were testing that low 40K range, you could go lower time frame because you're looking at the setup. You're trying to, that's a key pivot point. So that's when you want to go to a lower time frame. But you don't want to forget the primary trend, the larger trend. the weekly chart. Some people might say monthly chart, but weekly chart would be quite fine. And what we're observing here is the price had a massive move, okay? And it's been a massive move from from October through April, and it's just digesting that move. And we're seeing a tightening pattern, an equilibrium pattern, and that more or less, very simply put, you have your high, you have your low, and then you have your lower high, and then your higher low. And then more, you can just basically see that tightening range. It's a contraction, and you get to that pivot point. So what you want to understand in classical charting, trends tend to continue. So you want to give the benefit of the doubt to whatever trend currently is in power, whatever trend currently has the force. So in this case, 60, 40, 65, you're more likely than not the trend will continue. And we've seen that very clearly here on the weekly chart because we see the lower high break, right? We see the lower high break. This was the lower high. We were, in fact, anticipating this lower high. Sentiment reasons and technical analysis. If you look back, sentiment was really overdone here. We also had some divergence, which we've actually talked about in earlier episodes of the show, where the on-balance volume was not confirming the trend. It was due for some type of a lower high, right? Moves need to consolidate. And I think one thing people get kind of worried about, and which is why it's often so hard to hold a winner, is that like every move has to consolidate, and sometimes it's a false bear break. Sometimes you do your flag thing, right? But sometimes you might come up and maybe do a head and shoulders, but then head and shoulders fails, right? And it keeps running. That just happened with ADA. And so all those things are within the context of a lower time frame. So you have to not freak out if you have a longer time horizon and you understand that moves will consolidate. So we see that clean consolidation here. While that was happening, we were also able to look at moving averages to help us have more confidence in the thesis or the idea that it was a bullish equilibrium, a bullish consolidation. The orange line, the 50-period simple moving average. A simple moving average really just means that each of those 50 periods has the same weighting, right? That's the opposite, not the opposite, but that's different than an exponential moving average. Here I have the green line, right? I've often found that green line will serve as primary, support on the dips in a strong uptrend like this, bouncing from the moving average, riding that upper Bollinger Band, that 8 EMA. Other people use 9 EMA, 12 EMA. Everyone has a different moving average, right? Doesn't matter. You use your moving average, and that works for you. Also, don't change it, in a different chart. Oh, this one works well in this one, and this one no. Like, have a method, stick with it, right? And this is what works for me. And you should try it out. 8 EMA, powerful. That's an exponential moving average. It's more sensitive. Exponential means the most recent candle gets a higher, more price weighting. Okay, the orange line held as support. If we look at the history of this move, and we have that 2017 high, and then we had a black swan bottom, all this move, the 200 simple, the blue line, really the real line in the sand, right? Held. And then after that, right, it broke out. So basically the point I'm trying to make, and I'm not making it too eloquently, is that after it broke out, the price had not even tested this orange line for quite a while. And it tested it here, but it never really closed below it. And so as a chart technician, we can't predict the future, but we can identify the trend, and then we can look for signs of trend strengthening or trend weakening. And had we closed, I see the comment from Edgar as learning so much. That's awesome. I love that. Had we closed below that orange line, had we closed below that 50 moving average, that would have been the first time we had done it in quite a long time. And that would have been a sign of trend weakening. And why that's important is I can give you an example. All right, on the lower time frame on the daily chart, and when we topped off in April, we can observe that we head right here on April 19th. April 19th, we've closed below the daily 50 moving average for the first time since, like the 7-8K area. So that was a sign of weakening. There were other signs of weakening at that time: moving average cross, the 8 crossing the 34, the upthrust. And upthrust is where you establish a resistance level, you break up above that resistance level, and you come back below. you're unable to hold that. That essentially, like a reverse move. You want to understand that a failed signal is a powerful signal in the other direction. So you have a resistance, you come back, you break up above it. Now, in theory, you should do what's called a throwback or a bullish retest, and you should hold that level. But should you not, should it fail, this whole move becomes a bull trap. You've heard it, right? But it's not just something fun to say in your chat room. It's actionable. It's a thesis. It's something upon which you can form a trade idea. You could, in theory, once it becomes an upthrust, so let's simplify it. Let's say there's $100. You go up to 103, you come back. Once you drop below 100, you could short it. Conversely, you think about the concept of a spring, right? Or a false bear break. We had this in 30K area recently in that 80-day rectangle consolidation we just had, but where you have a support and let's say it holds, but then you break through it. And let's say it's easier or more actionable, I would say, when it's a key support level. So should you break below it, that key support level, you come back above it, you could say, hey, that's called a spring. That's called a bear trap. You go long right there. And basically that's your stop loss, generally that area. So those are things we want to keep in mind. That was kind of fun to go down that rabbit hole. So on the daily chart, what is going on? We want to keep in mind, even though we are, everyone's having a great time, we're all drinking lemonade and we're all at the barbecue, we still want to keep an eye on that really important level, the 42K level. All right. The highs of January, the lows of February, really the top of this rectangle of an 80-day consolidation in the rectangle. We've talked about this in prior shows. Go check the watch list. We had the head and shoulders completed, dropped us into the rectangle. We did that 80-day rectangle. We broke out of that rectangle. And when you break out of a consolidation area, in this case, like I said, 80 days, that's a long time. So it's a significant break. Sorry, that's a little bit lower up top. That's a significant break, and it should hold as support if it's tested in the future. Look what happened. It was tested and it held. We almost dropped back into the rectangle, didn't do it. So we have a nice clean uptrend. We did the throwback, the bullish throwback, top of the rectangle, and then we continued. We broke out and we broke over that lower high. So what matters now? Ideal scenario for bulls, and we're going to bring in our guest here in just a minute. Ideal scenario for bulls would be to hold that level. 52.8. And Dan, if you want, you can have your charts ready too. I'm happy to check out what you've got going on. And then really this level as well, that 48.5. So we'll continue to kind of watch those levels to see if the chart can continue to build that higher lows that kind of continue with this rising demand. I hope that was fun. Let's jump right in to Chartman Dan. What's up, man?
Hey, glad to be here.
Awesome. Please tell us who you are, what you do, how we can learn more about you.
Sure thing. I'm charting man Dan. I've been trading for 11 years. About 6 years ago, we started the Chart Guys, which is a community where we're into all kinds of markets, commodities, cannabis sectors, stocks, futures, crypto, and it's just creating an environment where we are all have the goal of number one, profiting, but helping each other. And we do a bunch of live streams during the day and courses and all that good stuff. So just a good place to hang out with friends and trade.
So how did you get started? And we've talked before and appreciate you coming on, by the way. So how did you get started in this whole mess?
Well, I got started in trading in general. Honestly, I watched my dad grind and drive and commute to work into the city, 45 minutes each way. And I did not want to do that. So I was in college and, was studying business management. And I had a few $1,000s saved up from high school jobs. And I said, all right, well, I'm going to try this. I was interested in the cannabis sector back then. And I'm going to give this a shot. And if I lose it all, I'll just get a job out of college like everybody else. And if I don't, then hopefully I won't have to. And it went wonderfully, and very grateful to be in this opportunity here.
That's awesome. It's been fun to see you grow. I remember it was that funny thing I was talking about, actually. I was in a play and I was red. And I was searching the ticker on Twitter and I found I'm like, who is this guy just putting out like videos all the time, and it's clean, it's no frills. And so that's how I found your stuff, man. So I like that approach about you. I wonder how it's hard for me to even do 3-4 videos a week, but I mean, you're just always working. How do you do it? How do you stay so motivated?
Honestly, I have no idea. I reached the point where it's, how do I turn it off at times?
Mm-hmm.
It's a grind. I mean, it's thousands of videos over years at this point.
Yeah.
And it's just become, I enjoy it, obviously. I wake up Saturday morning and the first thing I do after my coffee is I'm looking forward to making videos. So it's the interaction with people, trading by myself. If I'm just clicking buttons for myself, I would be bored of it by now. But interacting with people, helping people, answering questions, that is what the motivating drive is at this point. And I know you feel that as well with how you interact with people on social media. And so, yeah, it's just been a motivation drive, and I'm waiting for it to burn out, and it just doesn't.
Man, keep on going. So that quote, I read your quote from the book, and I wonder if you maybe want to just touch on that topic about that mindset and maybe how to avoid getting into that position in the first place.
Yeah. So for me, it was back in the stock world is when I learned that lesson. And it would be suddenly, I'm making a technical trade and I'm stuck in a position without a stop loss or whatever mistake I was making. And next thing you know, I'm reading about the fundamentals of the company. Like, oh, is there a reason I should be holding now? Maybe there's something good coming up. So yeah, that's obviously a huge red flag and something you don't want to be doing. And it's like you said, you got to cut the losers. You have your trade game plan established. I learned from those lessons, have a stop loss on every single trade. I really don't like that sick feeling in my stomach when I'm completely out of control of that trade. So that is just a hard, fast rule on every trade that I make at this point. And then it's just, you don't feel that way if you stop out. You take your loss. It's part of the game. And that's, people like to look at us traders and point out, haha, you lost or you were wrong. It's like, man, I've made 500 to 700 trades this year. You know how many times I've been wrong? I'm very used to being wrong.
Yeah.
So it's a major part of this game. We just got to be right more than we're wrong, and we got to cut our losers.
So does it bother you when you're wrong? Like, how do you deal with that?
No, not at all. I've been wrong multiple times this week. As a day trader, it happens all the time. So it's just constantly learning from your mistakes. That's the only way that you can stay sane, because when you're making the same mistake over and over and you're beating up on yourself and it's this negative feedback cycle psychologically, that's when it gets really detrimental. But if it's a mistake that's acceptable as far as its size, and you can look back at it and say, okay, I'm taking this lesson away from that mistake, and in next year I won't be making this mistake, or hopefully not as often, then you can turn it into a productive mistake. And that's important, because again, if you get in that negative feedback loop and you get down on yourself, it can really, it's just a runaway train, and you have to have a positive mindset.
There's no way out, right? Other than a hard break, when you get in that kind of position.
Absolutely.
So what do you think about Bitcoin right now? Is it hashtag alt season? Like, what's going on here? Give us your thoughts.
There's a major shift has gone on this past couple of weeks where the Bitcoin dominance has started to pick up. And over the last year plus, it's been, generally speaking, the altcoins have been leading on the bull moves up. And sometimes it'll be, Bitcoin makes the first move up, then it trades sideways, and then the altcoins, outperform Bitcoin. But I was very surprised at the speed of the move. I was not surprised at the weekly high or low around that. We had a daily tightening range, break bullish out of the low 40s. But to go straight to a 53,000 break to a higher high in 1 week, that was surprising to me. And I put out a video yesterday where I was pointing out all the different signs that, for me, I feel like the probability of an ETF increases with this recent price action, because I believe that, again, people would be in the know if it were going to get approved. And then that shows up in the volume in the charts. And then traders like myself act on it and then just magnify those signals. And yeah, it was surprising enough that it shifts probability. So for me, if the probability of an ETF a week ago was 50-50, now for me it's 60-40, just watching this price action.
That's interesting. I kind of shared those thoughts. I thought maybe we'd consolidate a little more before challenging and breaking that 52-53. Do you worry? I mean, if it's ETF, are we selling that news? I mean, you know what I mean?
Good observation. I believe that the more we run up, the more extended we are, then the more. Yeah. I talked about it again yesterday, where if we're extended, we get the news, and then we pump for a couple hours. Okay, once those 2 hours after the news passes, who is left to buy? If the insiders have bought, and the traders that are acting on the signals have bought, and then the late people that are acting on the news have bought, now who's left? So it is definitely a possibility that would be. But again, you have to keep in mind, a sell the news event, if it's on a big bull break, we're just going to look for a daily high or low, and it's not necessarily game over.
The newer traders would just FOMO in. So I think it would just be a normal. It would just probably accelerate the move that's already happening. Kind of, it may naturally do that type of a move. How do you avoid, Dan? How do you avoid buying that blow off top and FOMOing in?
You have to have, well, honestly, what I've been saying recently is my superpower is not caring if I miss a move. When you're in this game long enough, and you're talking decades, if trading's around, you know, I'm going to be trading 30 years from now. So if you're not afraid to miss the move, you know there's always another move coming. And the amount of times I've seen euphoria cycles in the cannabis space, in 3D printing stocks, you know, 5 years ago, however long it was, they just keep coming. And there's once in a lifetime opportunities a few times every few years. So it's definitely, you know, you don't want to let too many opportunities pass by, but if you're not ready with an established game plan, you can't just jump in, like you said, at the shiny object. That's just not the way that it works. And if you do, you will learn your lesson enough times that eventually you won't.
That's great advice. So what, you know, I'm curious, and the people watching might want to know, you know, relative strength, right? Like what alts do you think have relative strength? And if the climate were right, and if it was one of those moments, where might you be looking to trade in that alt kind of arena?
So any name that is close to all-time highs gets put to the top of the list, just because once that all-time high is hit, that's when the momentum really gets going and you get price discovery and a lack of resistance. So I know that, honestly, I don't even know the name of some of these projects because I just do the tickers, but AXS has been breaking out. And I love the breakouts because I'm a bounce trader. And once you're breaking out significantly, those first 5-minute oversold, first hourly oversold, those bounces are just such high probability because everybody's looking to get into the runner. And I love those plays as well. But I'm also keeping an eye, you know, in the cryptocurrency space, we have falling wedges on altcoins, Bitcoin pairings that show a lot of weakness. So most recently, you know, Cardano ADA has been really underperforming, and its BTC pairing got real oversold. And there was just a nice little short-term trade based off of that, you know, within the last 24 hours. And the move hasn't developed significantly, but it was oversold enough to be looking there for a short-term bounce. So it depends on your time frame. You know, are you looking for a swing trade runner, or are you looking for just a day trade? Because the weaker names can give you some decent day trade setups as well.
That's interesting. So do you prefer, I mean, are you more of a breakout guy or a reversal, you know, kind of bottom fishing, or does it not matter?
I am a bounce man. I love the fear and the dumps. And I didn't develop this edge intentionally. It just clearly became relevant to me. Like, you do well on these trades. And so it's funny, you know, I look at the Bitcoin breakout and the move from 40,000 to 63,000, I made less than I did when the chart dropped from 60 to 40, and the weekly is just all red bars. And I had more profit going bullish during those red bars, just playing those 4-hour oversold bounces, locking in my gains real quick, back to all cash, waiting for the next leg down. So that is my style personally, but everybody has different styles, obviously.
I love it, man. I want to thank you for sharing all of that. Your knowledge is fantastic. I'd like to encourage everyone who's watching to check out more of what you do. If you want to just remind us where we can find out about you.
Sure, chartguys.com and our YouTube channel, Chart Guys. We put out tons of free content all the time.
That is awesome, man. So thank you. I hope you're doing well, and you know, talk soon, right?
Much love, Big Cheds.
All right, buddy. Take care, buddy. So thank you. I mean, what a great episode. We're just wrapping up here. Episode 5, the dangers of social media. You know, trading's complicated, and I want to kind of try to simplify it for you. So that's what this show is, a little bit of analysis, a little bit of wisdom. You know, of course, I want to thank our sponsor, Bing Bon. There's the link will be in the sign up. You can trade all sorts of stuff over there. They're always adding new pairs, all sorts of cool stuff. Definitely check them out. If you want to find out more about me, I am on Twitter at Big Cheds. The book that we talked about before, Trading Wisdom, 50 Lessons Every Trader Should Know. Thank you, Banter fam. You've been wonderful with your support. Please, by the way, hit like and subscribe to support the channel. If you can't get the book, I do have a free version on my YouTube channel at Cheds Trading. You can check that out. If you like my style of technical analysis, I'm a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. The link for that is as well as in the intro. You can check that out. So really, you know, this is a great opportunity for me to reach out to you and talk to you. I love the community. And I enjoy the interaction. And you have to understand that trading's hard. It's going to be a long journey. And if you accept that, as soon as you accept that it's going to be really hard, the way to continue and to survive is to trade small, limit your risk at every opportunity, right? And if you do that, you'll give yourself a chance, right? You give yourself a chance to succeed, right? You got to do it, because otherwise you keep swinging for the fences every trade, especially when you're learning. It's just going to get you in trouble. So it's been an honor to do this today. Until next time, Big Cheds out.